Okay, Apex Trades, hope everyone is doing well. This might be possibly one of the best 1 minute time frame strategies I've seen or I've come across. When I say come across, actually, it's more of an evolution of my own trading strategy and plan, which I normally do on the longer time frame, but for some reason it just seems to be, it seems to work really well on really short time frames, and I'm just going to go over it a little bit. So what do we need for this? Well, we need the 50 EMA. So let's type in EMA. We just want one, that's all we need. Let's amend this. It's 50. And I was playing around with this and I was just looking at how the 50 EMA responds. The other indicator we need is the high volume bars, right? High volume bars by Crypto Rife. And this basically gives an indication of where there is high volatility, or sorry, high big orders that go in within a fast acting candle, higher than the mean, higher than the average of what you normally see. So blue is moved to the upside, red or black, blue and white is moved to the upside, red and black is moved to the downside. The blue represents the high volume bars and to the upside, and the red indicates high volume moves to the downside. And the strategy is really simple. What we're looking for is whenever a high volume bar is below or above, but ultimately closes in the direction that you want it to go. So let's say, you know, in this instance, let's just zoom in a little bit here. You could argue this was the first time we crossed the 50-day moving or the 50 period moving average and closed above it. Problem with this is it's just right on it. That could be quite subjective. This one is a perfect example of where the high volume bar crossed the 50 EMA and then closed above it. So let's just say, okay, well, the trading strategy is you maintain this until either number one, you're happy with the, so it's again subjective, you are happy with the amount of ROI in terms of your kind of profit and loss, or you want to use pure mechanical dogmatic plan in terms of when you get out. So it could be two things. It could be the first red volume candle to the downside, or it could be when the first bar crosses the EMA and closes below it. So let's just look at this as an example. So when was the next one that this occurred on? Let's see. Here, this is another time we had a volume candle that crossed above, and if you use the first time we crossed below, you know, you're still looking at a decent enough profit. This would have been the first red candle, so whether you got out here or whether you got out here, this one would have been better. Where else did this happen? I'm just going across. That one wouldn't have been valid because it wicked, but it didn't actually cross and close above. Just continuing this further. This is on the 1 minute chart on the Bitcoin BTC here. So we had a candle that started below the 50 EMA, closed above it. Where was our first red to the downside? Might have been there, or it would have touched here. So let's look at some, I'm just going to keep going along. You can miss out on moves, of course. This would have been a nice one, but ultimately you're looking for volume and single buy orders, single big orders, and that's what ultimately these volume candles represent. It's where it's you may have only one order, but that order may be of high volume rather than lots of little small ones. So you can probably suggest that these candles here and these candles here are more, even though some of them are higher volume in terms of maybe that versus that. But ultimately what it is big orders from one person. It could be an institution, could be a hedge fund manager, could be, you know, just a whale, but that normally signifies some sort of good reason why someone's getting in at that point. Not always, and you know, we always have to kind of err with caution, but let's just kind of see where this has happened. So we got one here. This would have been a, you know, a good one to have gone into. We would have got the move here. Let's just go to, let's see, sorry, let me just double check it. This is this one, long position. Here, we'll put our stop. That's about right. Yeah, just below. And we would have either, depending on your appetite, got out on the first red volume candle, which was here. Let's move this up. For the 60-point move. Now, my personal preference, I would be trading this on a 50x leverage with a, you know, a relatively tight stop loss. Where was the next one? Next one was here. Depending upon whether you think this was a good move or not, I probably would have waited because the bar closed, you know, it was right on the 50 EMA, and you could argue that that wick or that close is pretty much on us. So I probably wouldn't have got in on that one. I would have certainly got in on this one. So let's look at that move. Where would this have got us? Let's go back into long. Would have got it in here. Would have got out on the, let's say, the first red candle. That would have been a great move. That was 339 pip stop, nearly a 3 risk to reward ratio. Actually, it would have been a lot more than 3 because you probably would have just went below these. Where we can really start to refine this is by putting in order blocks, right? So, you know, looking at where price is constantly getting rejected, or, you know, a lot of the rejection is happening around certain points, so you can refine where your stop loss is. I'm just being quite quick and dogmatic with it. Next one. Let's see, looking for a blue or a red candle. This one. So you'd have got in here, and this is currently live, yeah. Short position. This was where we broke through. Stop just above here, nice and tight. And then we would have got out on the first red candle here, or, you know, it might not. You may have been looking for the candle to close above the 50 EMA. Still another nice 49-point move. Depending on your leverage, you know, that could still be turn out to be a nice move. So I'm just looking at this as a live opportunity. But let's just keep going further back. I trade on longer time frames on high volume candles, but I also mix it with the MFI and the squeeze momentum indicator. But on this one, you don't need to. It's just really straightforward, really simple. I do want to try and find one that was a loss, because, you know, we do see losses as well, and we don't just want to put the wins in. So let's try and see where we maybe didn't win. Here's another one here. So let's say it was a long position we would have entered. We'd have got in here. Where would we have stopped out? First time we touched the EMA was on this bar. And the close was there. So if you're a scalp trader, this is not a bad little thing to be reviewing. So, you know, very small risk to reward ratio on this, of course, but still a win. But we need to try and find a loss, because we do want to see some losses, because in terms of portfolio management, this one might be a loss. Let's see. Yeah, this one would have been a loss. So go back in. So we would have shorted here. We'd have had a stop just above the candle because it was a volume candle, and we would have got stopped out, let's see, on this candle here. So that was a loss. Next one. Okay, get off that. Sorry guys, what am I doing? There you go. Let's keep going. It's great when you get the big moves. I wouldn't have took that one on too close to the line. You want to see it clearly going through it. I would have took this one though. This was a loss. Actually, no, I probably would have took this one first. So that was a short. We either got in here. Stop loss would have been here. Maybe just above these. And then our risk to reward, well, this would have been another entry, so we'd have got stopped out straight away on this one. But then let me just delete that because we know it was a loss. But we'd have got in on this one. Our stop loss would have probably been here, and we may, again, it's all to do with your risk appetite, whether you took a little profit here or you would have tried to let it run. But I'd probably say this was 2 losses in a row. Thing is, if you're using really tight stops, you know, but you're using 50x leverage, it can be a good one. I mean, is a really nice one. So let's see, we short. We get in here. Where's our stop? Difficult one this because we are already on a downward trajectory, but let's just give it a little bit of room to breathe. So we maybe say here. I mean, you'd probably have an order block around here, so let's go there. Where do we get in and get out? Well, you're looking for a break above and a close above the EMA, which would have been there. I'm just looking at that one. But again, if you want to work to different ratios, so let's say you want, I don't know, 2-to-1 ratio, 3-to-1 ratio. You know, there's already a 3-to-1 ratio here. So let's keep going. Difficult on this one because it's so close to the line. Can't honestly say whether I would or I wouldn't have taken that trade. Likewise, would I have taken that trade? It's just on the line. Let's assume I wouldn't have, because well, why not? But that's still a nice, that's still a nice move nonetheless. So here's the reality. Some of them are going to be losses, and you'll take a small loss. But the winners can really really grow and go into decent wins. So I think overall the strategy is probably a sound one. The problem is you've got to be in front of your laptop or your PC or whatever, just monitoring and maintaining these. I think this is another one. This is a fantastic example. So got in here. That's our first move. Go as high as, actually, this was at its peak. Yeah, 6.75 risk to reward ratio, and let me just see what that is in terms of a 400-point move on 50x leverage. That's a nice move. Realistically, if we're playing the game now, whether we get out on the first red candle is here, or the first time we close you know, close built on the our first candle closes on the first EMA. I mean, look at this one, where the candle closes below the EMA. That's the first candle. So, you know, as an example, where's that going? That's there. I mean, that's 490 point move, 8.26 risk to reward ratio. So with this, I mean, look, you are going to have losses, of course, but with really small, tight stop losses and using something like a 50x leverage, you know, in terms of the wins, the winners can sometimes be fantastic. So just this is my own. I don't think I've seen anyone use this strategy per se, at least on the 1 minute time frame. This was another one here. You can see that's a blue candle there. We broke in. First time we closed below was this candle here. So let's just extend that across. There's probably going to be better ways to weed out the noise as well. I mean, right here we started to see a break on the MFI. We were just coming up, sorry, on the squeeze momentum, we were just coming up on the MFI as well. So you could see we were looking to coil up for a big move after being below the heart line for such a, you know, a long period of time. I say long period, but only on the 1 minute. But, you know, we were due a breakout, which we did get, and this was one hell of a move. So really good strategy, this one. One I'm going to start employing and covering more on my channel anyway, and even doing some live trading, just to show you how it moves. I'm not really a scalp trader or a day trader. I tend to go for swing trading, but I do like this strategy. And it's just a combination of how I trade long term, but actually seeing how well it can be executed on shorter time frames with you know, some rules of engagement around it. And the rules are quite simply, we need a 50 EMA. I've trialed it with different EMAs. I've trialed it with 30, I've trialed it with the 9, I've trialed it with the 5 and the 200, but the best use case has been the 50 EMA. And yeah, the rules are quite simply both bullish or bearish. You look for a high volume bar, whether that's red or blue. Blue to the upside, red to the downside. Has to be below or above the EMA, depending on your conviction. But it has to break through and close above that. Try to stamp out the really close ones that are just right on the line, because in the experience, I think we've seen a win and a loss. Take that as you will. And get out, depending upon your appetite, either when we have our first red bar, if we're going bullish, or we close below the 50 EMA. And that's it. I'll keep updating and seeing how I get on. Maybe cover it on my trading journal as well, which could be good for people who are following my channel. So that being said and done, that's all I've got for you, and I will speak to you guys soon.